What's up, friends? This is Manoj Soprani. I welcome you all on behalf of the Edupedia world. So, guys, I just hope you are having a great day today. It's a beautiful day outside, and certainly you guys are revising your topics time and again on regular and recurring intervals. Perfect, guys. With that belief and hope, let's start the presentation for the day. So, until our last presentation, we did discuss about the topic relating to fundamental analysis. So what is the fundamental analysis? What are the strengths and what are the weaknesses which are involved while doing any kind of analysis that is fundamental in nature as far as the present stocks and security scenario is concerned. In this video presentation, I'll be talking and making you understand as to what are the anomalies and phases involved in doing a particular fundamental analysis with any kind of stock, security, or any other instrument available in the market. So it's a three-way match, guys. So let's begin our presentation while knowing what are the phases of fundamental analysis. So broadly, the phases of fundamental analysis are divided into three segments. One is economic analysis, next one is industry analysis, and finally that's the company analysis. So what do we mean by, if we'll be talking about the analysis and we are segregating it into three parts? So what's the major motive behind doing so? So that's because the kind of security and the valuation of any kind of security, let's suppose Reliance stock is trading out on stock exchange. So that particular stock is not just going to get hampered or be affected by only the kind of company working which is going within the company. So there are other major factors as well which are actually going to affect the share price of Reliance. So that's not just about the working of the company that's going to affect it. It's about the overall industry scenarios, what's going on in the similar industry. If it's about chemicals, so what all other chemical competitors are doing so in the industry. And broadly, that is also going to get affected by what's going in the entire economy. Let's suppose currently demonetization is going on, right? So we have crunch of liquidity in our hands. Cash is not available in unlimited amounts. There is a limit which has been fixed for many of the people, not just for the individual, that's again for the corporate as well. Corporates are also feeling the difficulty of providing cash to the laborers, to the people who are not having the bank accounts. So that is going to affect to the overall economy as a whole, right? So that's not just the case with Reliance. That is going to affect any other company, whether it's Indigo, whether it's manufacturing based, any other company, Parle-G, FMCG brand like ITC. So wherein there is a possibility of providing more of cash because these kind of industries involve more of laborers rather than more of employees. So laborers are the kind of people which are not supposed to have major bank accounts. So they are routinely paid into cash. So that's about the overall analysis, how basically the valuation of the stock can be easily compared with and done. So first of all, we'll have to take into consideration that is economic analysis. Then we'll move forward as to what should be considered while company's valuation as far as the industry analysis is concerned. And finally, we'll move to the last segment, and that is what company analysis should be done while selecting any kind of particular stock, whether to invest in it or not, taking into concern the complete company analysis for that matter. So let's begin as our presentation for that matter. Are you guys all set? Perfect, guys. Let's take off. Economic analysis. So guys, this question was asked in CA final examination for May 2011. What does economic analysis basically stands for? And if I have to sum it up in a single sentence, what will it be? Though it's a very broad term, but still, economic analysis means the analysis of the economy as a whole. So that's a simple sentence in which we can sum it up, and definitely nobody is going to have any kind of problem because each and everything is involved in this particular sentence. Economic analysis means analysis of the economy as a whole. So wherein if we'll be talking about economic analysis, investors guys usually expect return on their investment with a very clear view of the economy as a whole. If the economy is expected to do very well, the investors expect returns also on the basis of that, right? So proportionately, if the economy is going up, they'll expect proportionately higher return. And if the economy is going down as an overall, So the investors are simply understanding the situation, and they will expect the returns which are proportionately lower. After all, good kind of economy would actually help in improving the living standards of the individuals, who are in turn would have the higher kind of monetary power for disposal, whichever the based upon the spending and consumption pattern is concerned. So this basically increases the consumption and business as a whole, which sees the increased sale and profits, which ultimately drives the share price and provides best kind of returns to the investors. So that's how this particular cycle flows on. So one way to look at the economy, what would that be? So we can simply look at the GDP of that economy, right? We can simply understand about the gross domestic product which is available in the economy, right? So if the GDP is going up, we can simply say the economy is going up. And if the GDP, overall GDP is going down of the nation, we can simply say that the nation is lagging behind on some aspects and is incurring some kind of decline in the overall gross GDP. Perfect, guys. So in that case, I can simply say that economy can be looked upon as a part of GDP. In order to calculate, what's the formula of calculating and computing the overall gross domestic product of a nation? So we'll simply do it C plus I plus G plus X minus M, wherein C means the consumer spending, people like you and me. I means the business investment, people like Ambani, Adani, Tata, the kind of business investment they make. G means the government spending, what all BJP is doing out in the center. And the last one, that is X minus M. What is the net export of the nation? So how much quantity were we able to export and how much quantity were we able to import? So the net export basically means export minus import. So if that's in the positive sense, we were able to provide more of export rather than importing, then that's a good kind of prerequisite which can be able to justify the increase in overall gross domestic product. That's a way to look into economic analysis. Performing an economic analysis is extremely important to determine the intrinsic value of a stock. So guys, if you want to go for like purchasing any kind of security, just don't merely go for purchasing or selling option for that security on the basis of company analysis as to whether you should invest or divest your investment in that kind of company or not. So first of all, you have to take up the broader kind of look. So what's going on in the economy? Whether the economy is going to favor up that industry or not. So nowadays, people are like running like anything behind the banks. So we can simply say that banks, people are going to deposit huge amount of money in the banks. So nowadays, though banking is having their utmost pressure, but having said that, still the banks are able to generate huge amount of revenue because of that increased deposits, and that increased deposits will help them in lending more of loans, and lending more of loans will help them in increasing their interest amounts. So that's how banks are going to get favored in such situations. So though that situation is not directly included for the banks, however, since something is going on in the economy which is indirectly favoring the banks, so that's how it is important to take into account the performance of the overall economic analysis, which is actually help you in determining the intrinsic value of a stock. So if I'll have to compute my complete investors required rate of return. So guys, that has been already discussed with you in our pretty much last presentations, wherein I discussed with you about CAPM model, capital asset pricing model. So I can simply compute my investors rate of return, required rate of return using CAPM model, and that was risk-free rate plus beta into the market risk premium, whatever they are actually taking. So from that kind of equation, we can simply realize that the risk-free rate and the market's risk premium are the two key ingredients in determining the required rate of return. Both are very sensitive to the changes in economic activities, and as a result, the investors' investment decisions are absolutely affected by the economic activities. So that's how things go on like that. An economy goes through non-periodic but recurring series of expansions and contractions, day in, day out. So that these contractions and expansions, the booms and the busts, are basically known as the business cycle. Life goes with ups and downs. So on a similar note, business goes with ups and downs. Expansions and contractions are a daily kind of phases in any kind of business. These are known as business cycle. So a business cycle has a very strong kind of relationship with the market interest rates. During high inflationary periods, interest rates are generally higher to curb the money supply, and hence we witness loss in purchasing power. Inflation is closely associated with the rise in economic activities, right? So, if a rise in economic activities will lead to firms' expansion to meet its heavier demands, as a result, the demand for credit will rise, which leads to the rise in interest rates. Guys, understood? That's the effect of like moving from one phase to another. So that's how things go on. The macroeconomic analysis basically helps you in identifying all those sectors that would likely to grow and wherein you can make the investments for the kind of best returns. So that's how macroeconomic analysis is usually helping you in doing so. The economic analysis is basically the study of economy-wide factors, which helps the investors shortlist the kind of stocks wherein they should invest. So there are many of the factors that like embodies the economic analysis. Let's understand what are those. So the factors embodying the economic analysis are these four primarily. One is national income growth, or I should say GDP, gross domestic product for the nation. Next comes various industry growth rates. Let's suppose manufacturing is going on, growing, and infrastructure, like real estate, is currently going down. So that's the present trend. And what's various industry growth rates? Apart from that, there is inflation rate in the economy, plus climate, monsoon that is going to have like especially when they have the strong linkages to the economic growth. So they are going to be a very important factor to justify and embody the economic analysis. That's how things are being done. So guys, that was all about the topic relating to economic analysis. This question was asked in CA final examination for May 2011. I hope you guys got in complete clarity as to what economic analysis basically means. So now let's talk about the various economic indicators. There are some categories of the economic indicators. So what are those economic indicators? Let's understand. So primarily there are three: leading economic indicators, coincident economic indicators, and the last, lagging economic indicators. So what does leading economic indicator mean? So guys, these are basically the indicators that lead the economy. If I'll have to like sum it up in a like single sentence kind of thing. Okay, nobody was aware about the situation of demonetization era, correct? But each of the persons in our nation were easily knowing the fact that US elections were going on, right? And most likely Donald Trump is going to be the next president of United States of America, right? So whosoever in our country was supporting that fact or was knowing the benefit of having become Mr. Donald Trump as the president of the United States of America in a favorable position, definitely that's a leading economic factor, right? America being one of the most powerful nations across the globe. So that is going to like directly or indirectly affect our nation as well. Our nation had wonderful relationships with Barack Obama, but however, whether the same relations will be like carrying on with the legacy with Donald Trump or not. So in that cases, since many of the people were knowing whether it's good or bad, so in that case, since it was already available as an option to witness that things will move on like this, so these are the indicators which is basically leading the economy, that is actually knowledgeable as far as this business cycle is concerned. They send a signal that whether the economy is reaching its peak or trough with the respective relationships or not. So whatever is going in the economy as a leading part, and the economy is getting inclined and affected with that. So that's the leading economic indicators. Coincident economic indicators is basically this. Demonetization era is an example for that. These indicators move together with the business cycle. As soon as this news broke up for the demonetization era, so there were many of the factors which were badly impacted. There were many of the factors which were badly, goodly, basically impacted. So in that cases, that's having a coincident kind of economic indicator relationship. However, might be a possibility for some indicators which are lagging. These indicators basically follow or lag the business cycle. So whatever thing has already happened, now the things are getting affected due to them. So in that case, if that thing happens, so that is basically about the lagging economic indicators. Something has already happened and now something else is getting impacted or affected due to that. So they basically send a signal that economy has reached their peak or trough. So that's already happened. So these are the lagging economic indicators. The economic growth is also a factor of the money supply and the liquidity in the system. During poor liquidity periods, businesses find it extremely difficult to borrow for working capital. That's how what is going on currently. And owing to shortage of money, the interest rates will rule higher, which increases the cost of their funds. Ultimately, that will reduce their profits and therefore their share prices as well. Thus, the money supply is the economy affects the investment decisions, gross national product, corporate profits, interest rates, stock prices. So, are you understanding, guys? This is extremely having a like so much of the impact on the overall company analysis whenever you go for any kind of option of investment. So, such is the importance of economic analysis. That's on a broader term. The increase in money supply fuels inflation, right? So that was about the category of economic indicators. I believe that you guys complete clarity as to what economic analysis means and what are the various economic indicators which affect any kind of nation. So now let's move to our next topic, and that is industry analysis. So what is industry analysis mean? What does it mean, right? So guys, industry analysis is basically a tool that facilitates a company's understanding of its position relative to other companies that produce similar products or services. For example, ITC has now launched a product, Bingo. Bingo makes chips in that way. It's into FMCG, right? Apart from that, we also have Pepsi and Company, which also produces Kurkure. So Kurkure and Bingo are on the same notes. They are the competitors of each other, right? So whatever thing which is going to impact to an overall industry as a whole will definitely impact Bingo as well as Kurkure in that sense. So no matter what's going on in the company, but overall industry will be getting impacted if anything breaks out, which is going to directly impact not just a single company but the overall economy as far as the industry is concerned. So herein, industry analysis is basically a kind of tool that facilitates a company's understanding of its position in respect to other companies that is producing the similar products or services. That's how industry analysis goes on. Industry analysis enables a business owner to identify the threats as well as the opportunities facing their businesses. So I think you guys must remember the fact that there was a news which broke out in the market pretty back regarding that there are some of the plastic components which are being found in Kurkure. Remember guys? Right. So at that amount of time, the business revenues of Kurkure as a Pepsi company of a whole in their segment got badly affected due to that news broke off, because people started not eating Kurkure anymore after the breaking of that news. So that's how it affected as a threat to their business. So industry analysis basically enables the business owners to identify the threats and the kind of opportunities which the business is going to face in a pretty sooner time. Next comes an industry analysis basically consists of three major elements: the underlying forces at work in the industry, next, the overall attractiveness of that industry, and the third, the critical factors that determine a company's success within that industry. So in any kind of industry, there would be a company who is a market leader and there would be a company which is at its lowest peak. So in any case, these three major factors are going to determine the success of any kind of company in their broad industry. So their underlying forces at work, how overall attractive is that industry. Next comes the critical factors that are basically going to determine a company's success within that industry. So guys, basically once we know that how economy is overall doing, it is important to analyze how a particular industry is performing before deciding to invest in any kind of company. So because it is possible for the overall economy to perform very well, yet there are certain industries that perform extremely poor, right? So it is necessary to examine the industry specific factors in addition to the economy wide factors. First of all, an assessment has to be made regarding all the conditions and factors relating to demand of the particular product, cost structure of the industry, and other economic and government constraints on the same. Since the basic profitability of any company depends upon the economic aspects and prospects of the industry to which it belongs, an appraisal of the particular industry's prospects is extremely essential. The industries basically display a two-way pattern: a short-term cyclical pattern which follows the business cycle, and a long-term trend which shows the industry's growth stages. And that's how it usually works, guys. So guys, it is extremely important to do industry analysis apart from doing economic analysis. It is important for investors to identify like in which stage the company and the industry is in when making such investment decisions. The life cycle of industry is not only the one which needs to be studied as regard to any other industry. There are many other issues which one needs to address. So what are those kind of issues when one needs to address while going for any kind of industry analysis? So those are competition. That's the first one. How competitive is the industry? You'll have to get that. Sensitivity towards external shocks, the resistance level of that company, if in case something bad happens to it. So what's the resistance kind of level that company can bear? So how sensitive is that industry to the external shocks? Next comes demand supply gap. So what is the demand supply gap for the products of the industry? Regulatory and tax environment. What is the regulatory and tax environment of that industry? Entry barriers. What are the entry barriers of that industry? Government's attitude towards that industry. Labor relationship. How is the labor relationship within that industry? Financial condition of the company. It's having medium and smaller enterprises more, or it's having like large cap companies in its bracket. And the last one, industry's performance in the past. So these are the broad factors. How much competition is there? What is their sensitivity towards external kind of shocks? What is the supply demand gap? If in case demand is good, supply will be good, profits will be good. So if demand will be low, supply will be low, profits will be low. So what's the regulatory and tax environment? The companies in a particular industry are getting the benefit of regulations and tax environment or not, whether they are getting some tax relief. So that is also going to be considered. Entry barriers. So how perfect is the competition over here? Whether there is some kind of monopoly or monopolistic competition, that has to be taken care of while ensuring the entry barriers. And how is the government's attitude? What's the government's attitude while raising for that industry? So currently the government is extremely happy with the fact that they need to increase the infrastructure on our nation. They need to make India as a better country, as a superpower. So infrastructure is appreciated. However, the prices of the property are going down. So that's the kind of government attitude. How is the labor relationship? Whether it's a labor specific company or it's automation specific kind of a company. If in case that's a labor specific kind of company, so how is the labor relationship within that industry? Next, the financial condition of the industry in that case. So whether it's about like stable kind of a thing, whether it's good or it's weak, it has to be taken care of while doing your industry analysis. And how is the industry performance? So these are the basic issues which needs to be addressed in industry analysis. I guess you guys got the complete clarity as to what industry analysis basically means. Now let's move to our last segment of the presentation, and that is company analysis, the main one, the major one, that is going to affect the company directly. So the company analysis basically involves careful examination of the company's quantitative and qualitative fundamentals. So what are the various ways with which you can understand about the company's analysis? You can do your company analysis. First of all, that comes into the picture as net worth and book value. So what is the book value of the company and what is its present net worth, whether it's going above that or below. There are major of the stocks which are doing extremely well. I'll quote an example for that as SpiceJet. There was once a time when EY provided them an adverse kind of financial statement, audit report, adverse opinion on just merely of the fact because it was that company is not going to work anymore because of the going concern issue. Going concern is basically a thing which provides you a way in knowing that okay, this company is not going to work for long because it is incurring recurring losses and surely it is going to shut down. So there was once a time. Now the present scenario is SpiceJet's share is moving like anything. It's going way beyond what was expected during that move time. It's growing and growing. So that's how SpiceJet touched the bottom and surely bounced back. So that was about the net worth of that company. Now it's going and growing very well. So that's about net worth and the book value. Next, sources and the uses of the fund. So what are the different sources which are being taken as funds? Whether it's debt specific kind of a company, whether it's equity specific kind of a company, or it's a mix of both. So it has to be taken care of. Plus, you'll have to ensure that whatsoever funds are being taken off by the company, are they simply used for the specific purposes or not? So what are the different uses of those funds? What are the different purposes of utilizing those funds? It has to be taken care of. Next, the size and the ranking of the company. So within the FMCG sector, there are n number of numerous companies. There might be possibility that a particular company is a market leader in that segment, and there might be a possibility that another company might be fairly doing poorly in that company. So it has to be taken care of while investing. What's the size of the company and what's its ranking in the overall industry? Next comes growth record. By growth record, I simply mean that whether the company is able to provide you on regular and recurring times the proper dividend, interim and final or not. So that's a kind of a barometer to understand whether the company is growing or not. So if the company is earning huge amount of money, surely the EPS is going to go up and high. So if the company's EPS is growing, so whether the company's DPS along with that is dividend per share, is also growing or not. So that should be taken into account, whether the company is growing or not. Next comes price earning ratio. Price earning ratio basically, guys, means what all price you need to pay for earning a single rupee. So it has to be as low as possible. If it's 16, I'll simply quote it that way. For 16 rupees, you get 1 rupee as earning. And if it's like 100, so 100 is the price earning ratio. So for 100 rupees, you get an earning of rupees 1. So it has to be as low as possible. So that's going to be the concern in company analysis. That is price earning ratio. Next comes about the financial analysis. What all the financial statements of that company speaks about that company, whether to invest in it or not. So that's basically going to be a big parameter to decide whether investing in that stock might prove profitable for you or not in the long run. Next, management quality, integrity and aggressiveness. Whether the management is, what's the kind of quality that the management is providing. There might be a chance that you personally like a kind of person who is a person of good conduct. That could be Mr. Ratan Tata. However, there might be a chances that people don't like Cyrus Mistry. So once he was supposed to take care and handle of this company affairs of Tata. So there might be a chances that management quality bit got disturbed. However, I'm not saying like that. So that can be a perspective of any other person. So management quality definitely decides whether to invest in that company or not. So that's management quality, integrity and aggressiveness. Next is shareholding pattern. What is the shareholding pattern for that company? So it's always better to invest in a kind of a company wherein there are lots of promoters, plus there is a lot of free float capitalization. By free float, I mean which can be easily traded in terms of common public. So that's apart from promoters holding free float capital. So it has to be in that way. That's because primarily if the company's entirely capital would be free float, there might be a chances that promoters are going to get exit the market very soon, and there are probable chances that the company is going to get badly affected by the results. So it's always better to invest in that company that is having some amount of promoters holding as well as some amount of free float capitalization. So check out for the whole shareholding pattern while investing. Check out that whether the promoters are not exiting the market while investing. So that has to be taken care of, shareholding pattern. Next comes about liquidity. So what is the liquidity? How liquid that company is? How much cash flows are there in the company? How many bank amounts are available in the company? What are the cash equivalents that is available in the balance sheet? That has to be taken care of. So these are the basic broad company analysis factors. How floating is available in the market for trading. That's how it is being done. It was all about company analysis. So guys, in this presentation, we did discuss about economic analysis, industry analysis, and company analysis. I guess you guys got the complete clarity as to what's going on with the phases of the fundamental analysis. I'll meet you in my next presentation. Before concluding, I would like to say a dose of motivation, and that is the will to succeed is extremely important. But what's more important is the will to prepare. Success is definitely not in your hands. In your hands, it's just that you need to prepare well. So first, make yourself good in that terms. Prepare well, and that's going to help you in succeeding. And that's how success will come to you once you prepare extremely well. This quote was mentioned by Bobby Knight. And with this, I'll say thank you on behalf of the Edupedia world. Keep interacting, guys. Stay connected. That will help us in understanding your needs way better. Love you. Take care. Bye.